Good morning, everybody. I'm Herb Morgan, Senior Managing Director and Chief Investment Officer, Cantor Fitzgerald Managed ETF Portfolios. This is my weekly market and economic commentary for the week beginning today, November 10th, 2025. If I have something to say intra-week, if there are big developments in the market, I put it on LinkedIn. Follow me there, just Herb Morgan. This presentation is designed for use with anybody. It doesn't matter if you are an investor or a financial advisor or just a student of the markets or just plain interested. You still have to make your own investment decisions. Nothing in this presentation is investment advice, no tax advice, no recommendation for the purchase or sale of any securities. Everything is informational. Please consult your own advisors before making any decisions. All of the views expressed herein are mine and may differ from the views of CFIA's parent affiliates or other portfolio managers at the firm. Well, we've been getting a lot of up weeks, a lot of highs, but last week we gave back a little. Government shutdown was continuing on. Just concerned about valuation, something called a technical correction. Technical correction is when stocks are going up and they just kind of went up at a pace that's above average, and people expect a little bit of profit taking. And I think that's what we got. More of a technical correction last week than anything based on any major concerns about the market, other than the ones I've already shared with you. You know my biggest concern is private credit. Fixed income was fine, although spreads widened just a little. You can see high yield gave back 1/3%. Nothing to get overly worried about yet. But spreads have given back a little. They're still historically very tight, suggesting that the investors in the aggregate are confident in the ability of non-rated or junk companies, that includes on the private credit side, to continue to pay the interest and principal on those loans. Interest rates kicked up a little with the 20-plus year Treasury index down about 0.5%. Getting into economic data released last week, we got the big PMIs, so beginning of the month. So we got the prior month PMIs for manufacturing and for services from both S&P Global and from ISM. Starting with S&P Global, they say manufacturing, which recall represents about 15 or so percent of the U.S. economy, expanded. So that's good. Anything above 50 means expansion. 52.5. Not so fast as the folks from the Institute for Supply Management, or ISM. They say manufacturing contracted. Every once in a while, I bring into these slides how these two differ. And we're not going to do that this week, but just to say they do differ. One is more domestically focused. They're both domestically focused, but one focuses on large multinationals, where the other has a more emphasis on small and mid-sized businesses. New orders, they say, rose, but we're below 50. Employment rose, also below 50. So I would say manufacturing continues to just trot along. The good news, however, is that non-manufacturing, otherwise known as services, is a much bigger percentage of the U.S. economy. It's about 85% of the U.S. economy. Here, the S&P Global reading rose from 54.2 to 54.8, a little bit below the estimate of 55.5, but a good number, and you can see that coincides with a long string of very, very good numbers. The services sector of the economy, according to S&P Global, is doing fine. And ISM, they say, hey, we had a pretty good month there as well. Look at that number, went to 52.4 versus an estimate of 50.8. New orders suggest further gains ahead. Business activity strong, and employment still not great, but getting closer to that 50 line between contraction and expansion. Construction spending for the month of September was delayed by a government shutdown, but we know construction spending had been in a decline. A lot of that is rate related. We had a little bit of overbuilding, just because of the zero interest rates related that happened during the COVID pandemic. Automobile sales took a slump last month. There was a little surprise there. Not overly surprised, but a little bit. You can see fell from an annualized pace of 16.4 down to 15.3. That was below the estimate of 15.5. Some of that has to do with, people are not as confident and secure in their employment or employment prospects at this time, so that's having an impact. Some of it has to do with a little run-up that occurred 6-7 months ago 10 months ago now, to get ahead of tariffs. We're still getting a little, slide off from that. Needless to say, though, not a particularly good number for auto sales. Then we move on to the trade deficit. Remember that the trade deficit is a subtraction from GDP, but of course the government is shut down, so we did not get the reading. But we do know that the government has been collecting tariff revenue now for a little bit of time. This graph shows you the monthly net budgetary receipts to the U.S. Treasury from the tariffs. And they had talked about, $300 to $500 to $600 to even $1 trillion, even $2 trillion a year in revenue. The implementation of the tariffs, you can see down here. Before that, we were running around $6 to $7 billion a month at the Treasury for tariff revenue. We're now getting to that close to $30 billion a month now. You can see about $30 billion a month. Question, the argument, the debate is whether or not that is 100% pass through on prices, or if that's sort of a profit tax on foreign companies that sell their goods in here that they weren't paying in the past. How much of that gets passed on to U.S. consumers and contributes to the CPI issues that we have, I don't know. That's the debate that's happening out there today in the public realm, but we do know that $30 billion a month is real money. We then moved on and got the job openings or JOLTS report for September, or actually we didn't get it because, again, this is a government number impacted by the government shutdown. Factory orders, same story. September factory orders, we do not know. So a lot of these data metrics, including this one, it's 2 months now without the data. We'll get that data soon because we got a deal to reopen the government. That happened last night. We're going to talk about that in just a couple of slides from now. ADP, Automatic Data Processing, a payroll company, puts out a jobs report. So we did get that. That's not a government statistic. They say payrolls went up in October, 42,000. Not a big number, but we had 2 negative months in a row of decline. So that's positive. They say the service sector added 33,000 jobs. Manufacturing, goods producing were up 9,000. Large firms were big. Medium and small size firms actually lost a little bit of jobs. Weekly claims for unemployment, still no report there. Continue to estimate, the estimates are out there. People thinking around 225,000 per week, give or take. Productivity and labor costs also not available as non-farm payrolls. That's the Bureau of Labor Statistics. That's the government report. Also not available. The University of Michigan's consumer sentiment reading just continues to decline, and kind of substantially so, and almost worryingly slow, to be honest here. Down to 50.3, well below the estimate of 53. You can see that there. Sentiment, no matter your age, your income, your political group, everybody says things aren't as good. Current conditions actually fell to a record low, 52.3, and the expectations are it's going to go down even further. This has to do with cost of living primarily, and now a softer or weaker labor market. And of course, inflation being stubborn and not, we don't know, we don't have the reports, but we think not giving way, which puts the Fed in a bit of a hard, in a quandary whether or not to cut rates, because they need to fight inflation while they need to help stimulate the employment situation. But the good news we got yesterday on Sunday, and that is the government shutdown, the U.S. government shutdown, now the longest in history, began on October 1st at 12 a.m., is now 40 days, or what are we looking at here today? Yeah, 40 days in duration. 900,000 federal government workers furloughed. Many did come back to work anyway. They felt their job was necessary, worked without pay. Thank you to all of them that did that. I think they've had to do that before in some of the other shutdowns. All of this shutdown really came down to one key dividing issue, which led to the absence of a funding measure in the Senate. The Inflation Reduction Act, which was a piece of legislation from during the Biden era, which expanded tax credits and subsidies under the Affordable Care Act, which was Obama's signature legislation, which were favored by Democrats. So if you buy your health insurance on a government exchange, you go in, you put your name and your address and your income, and it tells you if you're eligible to get your health insurance subsidized. So it might say it's $1,200 a month, but you get a subsidy of $600, bringing your total cost to $600. Well, the subsidy has to be paid for. Democrats favored expanding or keeping those subsidies. Republicans were of the position, given the debt and deficit situation, the budget situation that we're in, that we could not continue to afford those. The Republicans also contended that even though it is illegal to give these subsidies to non-U.S. citizens, I should say non-legal immigrants, that they were getting them anyway. They weren't properly enforcing, looking through, etc. And the total cost of these is about $125 billion a year, covering about 15 million people in the country. We're not going to say residents or citizens, for a total average of about $800 a person. Republicans contended that a lot of that was going to people in the country illegally that were not eligible, and they wanted to make sure this didn't happen. So they can't move this out of the Senate because of the filibuster rule, which requires 60 people to end debate. So they just continually kept this in debate. It's not a simple vote like a 51-49 vote. And then President Trump began to advocate publicly to end the filibuster rule, which if you've been a student of President Trump's Machiavellian tendencies, he didn't really want to end the filibuster rule, but he wanted people to believe he wanted to end the filibuster rule, thinking it might happen. Democrats did cave on this. 8 of them, Democrats and independents, voted with the Republicans on Sunday last night to end the filibuster, which now just moves this continuing resolution, which all it does, it moves it to the House now, but what it does is it funds the government, there it is, through January. Also includes prohibitions on large layoffs during the shutdown if it happens again, guarantees back pay for those currently furloughed, and it does secure a pledge vote. In other words, let's just vote on the budget and vote on whether or not we want to subsidize people's health insurance. Let's just vote on that as a standalone, a pledged vote in December. It doesn't guarantee an outcome or a certain vote, but it guarantees it'll be voted on. Now it'll most likely get voted down because the Republicans have the majority in both houses. But the Democrats would see that as a win because they could see publicly, they can say, hey, publicly Republicans voted to take away your free socialized health care subsidies, and that they believe will help them at the ballot box for the midterm congressional elections in 2026. How's that? That's how politics is done in America. We're just about done with earnings season. It was great. It was great again. Big cap tech always does good. We love that. We're really, kind of through a lot of things here. You can see here, let's look at 79 out of 79 financials. Average earnings surprise, almost 9%. Tech, 47 out of 63, average of about 8%. Communications, which is really tech, we just separated them out because it got so big. That was kind of a surprise. That was a negative. But everything else really good across the board, and we will now move on and see what happens next in the economy, start focusing on the Fed meeting in December, about 30 days from today. Will they cut 25? Will they cut 50? Will they not cut at all? Not much in the way of economic data this week. Most of that came out last week. We've got small business optimism on Tuesday. Jobless claims, which probably, we may get those. It takes a while to get the government back up and running, but just maybe we'll get those on Thursday. October CPI, that's also a maybe. Friday, we've got retail sales and producer price index, all maybes because of the government shutdown. We do have to get this still passed through the House. It's not technically over, although it kind of is. Okay, every week, all of this podcast plays. You get the audio. If you want the video with the charts and graphs, make sure you watch on the YouTube. I'm Herb Morgan. I do thank you for tuning in to Slaying Bulls and Bears. I'll be back to you again in 1 week.